Friday morning, it's McCollum on Business. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world, get you ready for the weekend here on this Friday as well. We'll look at the market watch, stocks we're paying attention to, local national stories that you need to know, and of course, with the war in Iran, we touch on international affairs as well for companies and how that's affecting the stock market out there. And let's not delay it at all here on this Friday. Let's get right into that market watch. And look at this. Yes. Basically, weak jobs report today. We'll talk about that here in just a minute. And now, because of the weak jobs reports here, and we know the rumors are the Fed's going to raise rates here coming up in September. Well, the market likes that sound of it here today is what's happening. So the traders see a bright side of dismal jobs report coming their way. And, a lot of people thinking more rate hikes coming up here to kind of stifle that inflation that's happening out there as well. That's what's happening. Sum it up in those basic terms. Dow Jones right now up the 154 points to 54,019. The S&P 500 is up 30 points to 7735. The NASDAQ also up here today. 198 points for the NASDAQ, 26,546. The Russell 2K is up to 22 points, 3025 for the small cap index there. And then there's Bitcoin. Up 647 points right now, 64,895. So trading right there just below that 65,000 range. Is 63 to 65 seems to be the happy home here over the last several weeks here for Bitcoin going forward as well. So we'll get into that report here and when we get to our first story here today as well. But people are, like, it was 73% last week when the Fed was meeting that the interest rates will go up here coming up in their September meeting. Well, those odds that the Fed will hike those September rates in that September meeting, well, those have tumbled here because of the huge jobs miss today as well. So a lot of people are happy about the news on the weak jobs report, but they're happy because rates aren't going to be pushed up here, and that means, of course, stock market is happy. I know it's confusing, folks, but that's basically what's happening today as well. I wanted to try to clarify this out there, and I'm probably making it worse. Treasury yields drop as well today after the big loss here in the jobs report we'll talk about here in just a few minutes as well. And I'm trying to get the number of the people, but I do know the odds are falling. So it was like at 73, 75% for a price hike in September as of last week. Well, that number's falling here today as well. But the big thing that's in the news today in terms of the individual stocks are the solar stocks out there, folks. Yes, first one we're going to look at, First Solar. This local company here works out of Arizona and does a lot of business here. 7.82% up for First Solar. What's happening with this industry? And well, this will be our second story today. Donald Trump imposed tariffs on products that are imported to make solar panels. Yeah, one of those tit for tats with China here happening again here this morning. Well, the solar companies as a whole are up today based off of that news. So First Solar is the first one, 7.70% up. The Invesco Solar ETF, that's actually up. No graph on this one. It's not coming up today for some reason, but it's up about 3% here today on that side of things. And then Solar Edge Technologies, that's up today as well, 0.43% right now. Again, solar stocks are kind of what everybody's watching today with the news, and we'll have more on that tariff structure there for a certain product there that requires solar panels, but not just solar panels, but it affects chips as well with the tariff and kind of the restrictions put on that. We'll talk about that here in our second story coming up. Later on when we talk about stocks, we'll look at Wendy's, Twilio, Trade Desk, and Cloudflare are all stocks we're going to pay attention to today as well. And at least leading up to the market opening, and as soon as the market opens, there's been several stocks that are way down today. We'll have to see if that trend's going with, of course, the market being on the positive side with the U.S. Private non-payroll report that came out today. And the U.S. economy unexpectedly, in huge amounts, shed jobs in July. A lot of that, well, kind of what you're facing, right? The elevated inflation reports that are out there, and obviously the uncertainty in the Iran wars, economic input, with gas prices and oil prices, and what else is happening in the market because of the uh, stuff happening over there in the Middle East. So we get this from the Bureau of Labor Statistics, and they've reported that employers cut 23,000 jobs in June. Well, that figure was below the estimate of the economists polled. They estimated 80,000 jobs would be added. Yeah, that's a big miss here, folks, is what we're looking at. The unemployment rate dipped to 4.1%. That was also below the estimated 4.3% number as well. Now, revisions were made to the payroll numbers for the prior 2 months. May was revised down by 66,000. Well, originally it had a gain of 129,000. So with that 66,000, revision, it's down to 63,000 for May. Then June's report, it was revised down by 37,000. So it originally had a gain of 57,000. You take out that 37,000, if my math's correct, we're looking at 20,000 is what it was revised to as well. So altogether, employment in May and June combination, well, now is 103,000 jobs lower than what was previously reported by the Labor Department. Private payrolls, they added 30,000 jobs in July. Well, the estimate on those was 78,000. Yeah, government payrolls, well, they went up in terms of individual sectors here is what we're talking about. Government payrolls, well, they went backwards by 53,000 jobs in July. Manufacturing sector, they actually added 5,000 jobs in July. Retail, not so good, right? Lost 19,000 jobs in July. Declines on, and that was super centers, general merchandise retailers. Those were down 21,000 jobs. And then gas stations were 5,000 jobs down as well. That is a big numbers there because it outpaced gains by sporting goods, hobby, music, book, those types of retailers. Those were up 10,000, but the losses on those two specific categories being greater means the retail numbers were down. Retail employment has shown little change over the last 12 months. Financial activities, they were down 14,000 jobs in July. Uh, you know, Credit intermediaries were down 9,000 jobs. Insurance carriers down 7,000 in the month of July. Employment in the financial sector is 121,000 jobs below its May 2025 peak number at that time. Now, healthcare always a strong point these days. It has been, no matter how bad the economy is. Healthcare added 22,000 jobs. This represented a slowdown, though, for the average monthly gain of 36,000 jobs over the last 12 months. So, ambulatory healthcare services, they contributed much of the monthly increase. There's 18,000 jobs increase for that specific category. Now, the number of long term unemployed, those are defined as people that have been jobless for 27 weeks or more, they tick lower to 1.8 million, but they've been little unchanged over the year. The long term unemployed accounted for 25.5% of all unemployed people in July. So the number of people employed part time, either for economic reasons, right? You need to make some money, but you can't find that full time job or one that you full time job that you'd like out there. Well, that was little unchanged as well. 4.8 million people in July. The individuals in this category, they prefer full time employment, but they're working part time. Either hours were reduced or they're unable to find the full time job that they want, as I said. The labor force participation rate was 61.4% in July. So little change month over month there as well. So unexpected, huge cut here. And like I said, what the Fed looks at for their monetary policy is inflation high and do you have a strong job market, which we've had until these July numbers here as well. So that's why people are now jumping off the bandwagon of a Fed rate hike. Now, we still have August to go through and August numbers before the Fed meets in September, but people are jumping off that bandwagon of a monetary policy tightening, meaning raising of rates coming up in September here today, because we're seeing for the first time in a while a weakened job market, at least for July as of now. So, like I said, we'll see here moving forward in August as well. And it's summertime, and there's a lot of reasons for that number, but surprise employment numbers here this morning. Then we got the tariff situation happening, right? Which brings more uncertainty to the market. And the White House yesterday, they imposed a series of price floors, even a 15% tariff on products made from polysilicon. That's a raw material used in semiconductors and solar panels. It's primarily produced by China, by the way, right? This is that tit for tat, right? Before President of China, Xi Jinping, does come to the United States and meet with President Trump here coming up in September. Donald Trump proclamation under Section 232 of the Trade Expansion Act of 1962. Well, it's aimed at supporting domestic chip and solar supply chains that's needed to compete with Beijing on artificial intelligence and energy. So, specifically targeting in this deal, that polysilicon. It's an ultra pure form of silicon. It sits at the start of the semiconductor and solar manufacturing supply chains. You need it to produce them. Manufacturers turn silicone wafers into solar cells and then assemble those into panels used for the solar projects. Now, American solar factories, First Solar, for instance, those companies, IonQ, for instance, for the last decade, they've accused Chinese rivals of dumping solar panels in their market, which then means receiving unfair government subsidies from China and moving their manufacturing to other countries to dodge the U.S. tariffs. Now, the U.S. does have two polysilicon, if I could say it, polysilicon factories. There's one called Hemlock Semiconductor. There's a plant up there in Michigan as well. That's a joint venture between Corning and a Japan company. Then there's a company, Wacker Chemie. It's a Munich, Germany based company. It runs a factory in Tennessee as well. So we do have two of them here, but China produces most of the polysilicon product. Domestic semiconductor manufacturing depends on solar because the solar industry's larger demand for polysilicon, well, it helps support production of the material required for their chips. The chip industry accounts for 2.4% of global polysilicon demand, which basically means the solar market drives down the price of the polysilicon for the solar companies. So, little tit for tat happening here between China and the United States, continuing here on this Friday as well. And, we know oil prices, oil is down right now with kind of the ceasefire happening again here in the Middle East. But we've told you about supply concerns here, and we have a new report here on our supplies. U.S. crude oil supplies, well, they're at the 45-year low. I mean, all because we're having to pull from these strategic reserves to kind of help gas prices stay at least where they are. I'm not going to say low, but where they are. Bank of America Global Research data, well, it shows that the level of the U.S. Strategic Petroleum Reserve is at its lowest level since 1983. So that means we have 43 days of crude oil supply. Yeah. The Trump administration's releasing oil from the reserves to, like I said, combat those rising energy costs because of that Strait of Hormuz problem we've been dealing with for the last 5 months or so. And the Strait of Hormuz, as you know, carries up to a fifth of the world's oil transports per day. Now, President Trump committed to a domestic drawdown of 172 million barrels over a 120-day delivery window. Roughly 108.6 million barrels of crude oil have been released so far, but current inventory levels do sit at about 304.8 million, according to federal data out there. And like I said, about 43 days worth of those supplies out there. That is the next concern if oil continues to be, because that releasing is, like I said, not keeping oil prices lower, but it's keeping it lower than where they would be at. You run out of that supply, well, that means you're not going to be able to control what floods into the market, and who knows where gas prices and oil prices will go at that time. Something to just make you aware of here is you're going to start shopping for Christmas time or next year for your summer travels and everything. They could be changing the way you buy your plane tickets. What I mean by that, well, shopping for those plane tickets, it's going to be harder to compare airfares across carriers if this goes into effect. Not yet, but it could. And it could become complicated, all because of a Department of Transportation proposal. They want to change current regulations. And if it moves forward, there will be changes. So I just want to make you aware of this here. So the existing federal rule, well, it requires airlines to show consumers the total ticket price, including the fare plus taxes and fees, as you know, total price. Well, that they want that total price posted more prominently than individual ticket components are advertised. Right? Because it's easy to go $59 fare like Spirit Airline used to do. And then you book your ticket and then you get your carry-on, your bag, and breathing ticket, your seat ticket, and all of a sudden your pricing of your ticket's $300, right? They want those to be all combined together because that helps consumers evaluate the all-in cost of a ticket up front and avoid being surprised by all those additional costs after you buy that cheap ticket. Well, a recent transportation department proposal that's going to allow airlines to present incomplete base fares to consumers. Now, as long as they also show the ticket's total price. So they're going to not have to be separate and bigger than before. So you can kind of get confused, right? The change would allow carriers to display the individual items that go into airfare, such like the taxes and fees, without visually distinguishing them from the ticket's total price. So, it's could this lead to confusion, right? You're going to advertise and show that lower price without fees and everything until you hit the buy button, is what we could go back to here. Now, the Department of Transportation is also weighing whether to eliminate a rule that prohibits advertising airfare components more prominently than a ticket's all in cost. Well, the Trump administration, they've been arguing that existing regulations are too strict. Yeah, I know. It's so hard for these companies to give you the total price before you buy it. So you can compare Delta and American, for instance, total price in. Yeah, the DOT states that the rule changes would give airlines more flexibility in advertising their products and services. But obviously, airline analysts worry that rolling back rules, well, that are designed to make airline pricing transparent, well, they're saying that could harm consumers because confusion, and it's going to make it harder for you to understand a trip's true cost. Southwest Airlines is on board with the people on that side of the conversation. Southwest Airlines opposes the rule change because its potential to confuse customers. Why? Customers are accustomed to interpreting fares as an all-in cost of the plane ticket. Now, we've gone from, having those issues and confusion and not knowing the total price so you get through it all, to now we have the all-in price. You take that away, several years and decades of the all-in pricing here, and all of a sudden you take that away, people, they say, and I agree with this, you're going to look at a price and assume it's all in and find out it's not, right? And a $59 fare might not be better than that $200 fare at another airline after, like I said, the breathing fee, the chair, the bag fee, the you looked at somebody fee that some of these airlines charge out there. So it is an interesting change being pondered. Nothing official as of yet, but I wanted to just kind of make you aware of that if you're, you know, going to be shopping for tickets. So pay attention to if that changes out there. And then, well, big tech taking another hit out there, specifically Meta this time, because in New Mexico, a New Mexico court did come out yesterday and ordered Meta to pay $567 million and then implement sweeping protections for teen users. Well, yeah, that's right, folks. They found Facebook and Instagram contributed to the state's mental health crisis, specifically for youth. The judgment comes after the jury in March ordered Meta to pay $375 million for violating the New Mexico State's Unfair Practices Act. So the company's total liability in the case is now $942 million about. Well, the judge in this case said and found that Meta had created a public nuisance in New Mexico and ordered the company to implement a series of youth safety measures over the next 5 years. The requirements include monthly limits on teen use of Facebook and Instagram, restrictions on notifications, tighter controls on adults contacting minors, yeah, even safeguards for AI chatbots, and enhanced reviews of child sexual abuse reports. Meta said it disagreed, no shocker here, with the ruling. They vowed to appeal it going forward, but another loss for a big tech company. They lost one in California recently, a couple in California. At least I think one in Florida, if I remember right. But they've lost a couple of those, and now New Mexico as well, here on the youth mental health side of these companies as well. Hey, speaking of airlines, we talked about ticket changes that could be coming. Well, just nothing you can do except trust they're being fixed. But the FAA has ordered inspections of hundreds of Boeing 737 MAX jets, possible cracking in the aircraft's body. Now, Boeing said the issue has not been seen on the MAX fleet at all yet, but they are proactively getting those planes inspected. Now, this was an airworthiness directive, which is for short, they're ADs. It applies to certain Boeing 737 MAX 8, MAX 9, and MAX 8200 airplanes, which it means it affects about 471 U.S. registered aircraft in the United States. Airline operators must inspect the fuselage skin and carry out additional inspections or repairs as needed through that. So this AD, well, it was prompted by reports of cracks in the bear strap at the forward upper corner of the forward galley door cutout. That's how they found them there, which is interesting because they put this airworthiness directive out there. The directive doesn't take effect until September 10th of 2026. How important is it, I guess, right? Boeing told Fox Business the issue was first identified on certain 737 next generation aircraft. It has not been seen on that 737 MAX fleet, but they're just extending the inspections to the MAX aircraft because those models do share a similar design and manufacturing process. So they're just being proactive and putting those planes on the list as well and telling the carriers to do their own inspections, get it checked out. Going forward, I don't know. I don't know why. There's nothing we could do about that one. Just trust that it's being fixed. But thought I'd make you aware of that here today as well. And here at the Friday edition of McCollum on Business, we'll be coming back here. We got local stories for you. Hey, if you worked at Salad and Go and you woke up yesterday morning wondering what you're going to do moving forward, a competitor here in the Valley is looking for you to come work for them. We'll tell you about that coming up. Other local stories, Kellogg's making a move in influencers and TikTok. Sometimes I wonder about them. They're doing something right now. I don't know. I'm going to make you aware. Maybe you'll be interested. I am not, but maybe you will be. Come on back. It's McCollum on Business, Friday edition. And we're back here, McCollum on Business, having some fun here on this Friday morning. Markets are up today, so a good Friday here as we're looking at it. We'll get back into that market watch in just a moment, but don't forget, it's Friday today. For you Real Matrix fans, new episode coming out today. The NDAA is the topic of conversation. Noon today, you get the episodes on Rumble, rumble.com/user/TME Media. Also, Rumble is with their search engines. We've finally been added to their search engine after a few months here. Well, Rumble does have it. If you go into that and just search the Real Matrix Angry Patriot, it pops up now as well. But we have all of our programming over there at Rumble. But today at noon, Real Matrix, new episode up there. Free podcast system as well, where you can find the Real Matrix if you prefer listening to your shows. Apple, Google, Spotify, Podbean. I'm naming them all here. I'm not naming them all. I'm forgetting a couple. But wherever you listen to your favorite podcast, you can find our programming as well. Just search in that case, The Real Matrix Angry Patriot. It pops right up for you. Of course, right after this show here, we're live on YouTube. And then right after this, we go right into the main event, also live on YouTube as well. 8 to 10 a.m. for the main event. This show, 7 to whenever we get done here before 8 o'clock is what we look at live on YouTube every Monday through Friday. Well, this show, as long as markets are open, will be here. Main event as well. As soon as we're done, we put it up on demand, both on YouTube, TME Media AZ, as well as over on Rumble, on that rumble.com/user/TME Media. Everything is out there for you. You can find it. Every show except for this one, McCollum on Business, has its own audio podcast as well. Just search the show name. The Main Event with Steven, The Main Event with Dale. Of course, The Pit Stop. The Pit Stop with Steven, or The Pit Stop Talk, comes right up for you as well. Listen to the shows on your favorite podcast system or catch them on demand, YouTube or Rumble out there. This week's version of The Pit Stop is up as well. Went up on Wednesday. A little shorter of a show, just news and look ahead this weekend to Portland for IndyCar and, of course, NASCAR up at Iowa Speedway. Well, because there was no racing last week, there was no look back as well. We're headed to the chase here in NASCAR, folks. It's about to get a lot of fun here. We're getting more and more schedules out there. Every show except for The Real Matrix and this show. This show's social media is reserved. It's coming soon. We're just working out some details there on it and for promotion purposes with some things that we're going to start doing here coming up. Over the summer, we're preparing to get it. And we've got some good positive momentum on guests and things like that. So you're going to want to stay tuned to it as well. But catch the social media as well for this for every show. The Main Event, TME Sports Show. The Pit Stop is the Pit Stop Talk as well out there for you. Join us there and follow also TME Media AZ on X. We greatly appreciate it. That's, of course, our company that our parent company that utilizes all of everything we do here as well. And folks, with all that being said, you're waiting for the Market Watch, so let's get back into it. As we said, the week numbers report has kind of boosted the market today and kind of gave it the, the confidence that maybe rates will not go up next month here when the Fed meets in September. Dow Jones right now is up to 218 points. S&P 500 is up 49 points right now as well. Nasdaq's up to 298 points, and the Russell 2K up 27 as of right now, that small cap index. And getting a nice little bump here, the Russell 2K is here lately as well, trading over that 3,000 level there, 3,030 right now. Bitcoin, well, right over 65,000 here today as well. So 65,136 as the day has gone on. There it is. So, everybody's looking at the dismal jobs report. It's not good for jobs, obviously, but what it's good for, well, the market and where investors see the market going and monetary policy, things to that effect. Treasury yields did drop today after the surprise job report. Oil is down here with still down into lower levels with the Strait of Hormuz situation going on, kind of with that ceasefire as well. So overall, kind of a nice area right now. And, we're just dealing with the housing markets and inflation, being still in that 3.7% type of stuff. Challenging market out there, and that's why we look at stocks we're paying attention to as well. We'll start off with a little bit of food here with Wendy's. Yeah, they're up 1.89% right now. That's a big change. When they pre-market, they were down 2% as well. Well, they reported global sales decrease more than 6% at Wendy's. It was driven by an 8.2% decline in the U.S. Yeah, we're not eating as Wendy's as much as we used to out there. They also withdrew its 2026 financial outlook, but they did beat the consensus on earnings, revenue, and adjusted EBITDA out there. But withdrawing your financial outlook, at least earlier today, was a negative. But the market kind of rebounding here on Wendy's company, 2.23% up here today for the restaurant chain. Next, we'll look at Twilio out there. It's customer engagement platform, 25.10% up here today for Twilio. The stock is surging here today. It was up over 17% in pre-market. Obviously, after the market opened, it's gone up to the 25%. Twilio sees adjusted earnings of $1.42 to $1.47 per share on revenue. I'm sorry, per share, and on revenue, they see it, their level at 1.51 to 1.52 billion dollars. Well, the consensus is only $1.39 per share, what they were looking for. So their number is above that, the whole range. And the consensus is $1.46 billion. dollars. And their low end that have it at, adjusted earnings is at 1.51 billion. So they've blown away their numbers, at least the expectation of their numbers out there. But also, Twilio boosted its full year revenue growth call, and now it's at a range of 18 to 18.5%. Before it was only at 14 to 15%. Not only that, so they've raised it big from 14 to 15 to 18 and a half. But the forecasted amount was only 14.8% growth. So Twilio, big numbers here in terms of their expectations coming up here and everything. And they're up 25.10% here today based off of that news. And then we got a stock here called Trade Desk. Yeah, digital advertising company. Not good numbers for them. They're down 19.81% here on Friday as well. They were down 27%, I think, is what they closed at yesterday. It was in that range yesterday. Another 19.81% down today. Second quarter earnings and revenue below expectations. Adjusted earnings came in at 34 cents. Well, the expectation was 40 cents. Revenue came in at 715 million. Yeah, the anticipated revenue amount, 751 million. Big miss on the revenue. Trade Desk down 27% yesterday, down 19.86% here today. Big miss here by Trade Desk out there as well. And then there's Cloudflare. Little bonus stock here for you today, up 10.25%. I couldn't end on that negative note, so we're going to look at Cloudflare here as well. 10.25% up, issued solid guidance for the full year in the current quarter. Cloudflare expects adjusted earnings of 34 cents per share. The expectation, 32 cents per share. Their revenue, between 736 and 737 million dollars in the third quarter. The expectation, $722 million in revenue. So their numbers as well out there. Second quarter results surpassed estimates on the top and bottom lines, and good guidance moving forward here for their third quarter. That leaves Cloudflare 10.20% up right now as well. And cloud cybersecurity is what they do, if you're unfamiliar with Cloudflare out there. And let's get into some local stories and, of course, a couple food stories for you coming up. We've been slacking this week on the food stories, but here locally, here in the Phoenix area and even Nevada, well, Angie's, right, a competitor to Salad and Go, the original owners of Salad and Go when they sold it off and then left Solid and Go and started Angie's in 2022 timeframe. Angie's is now, well, they're trying to help out and offer a lifeline to former Salad and Go employees. Obviously, Salad and Go closed this week abruptly, all of its locations, and it shocked everybody, and everybody was out of a job. So Angie's is looking to hire former Salad and Go employees as it expands its production and its warehouse teams. It's preparing to open 6 Phoenix area restaurants this year. Here in 2026 for the rest of the year. Here's what they said. And look, you can really appreciate Angie's. It is just a caring company. They want their prices. They want their food as good as possible and as cheap as possible. And then also they just care about their employees, right? Look at what they said. Quote, they deserved more time, more support, and a softer landing. They put that statement out when they announced they're looking to hire former Salad and Gold employees out there. So if you're in that situation, definitely hit up an Angie's as well and see if you can slide into that position here and help you out from that Salad and Go disaster that's happened here over the last week as well. And let's go down to Tucson here. And Tucson officials have adopted new regulations for large-scale data center developments. They did that this week. Now, this is 1 year after the council rejected that Project Blue, after the NDAs and a lot of controversy about that data center Project Blue, and everything that was planned and then stopped short and voted against because of the uproar of the community. So throughout an hour of public comments, residents were unanimous in their call for a complete ban on data centers in the Tucson area. Tucson local down there did speak. Several of them did, but one specifically delivered A big speech to raucous cheers from the crowd. They said, when our share of shrinking river just got cut by 40%, when our electric bills have increased by 14%, we must conclude that data centers absolutely do not belong in the desert. And of course, they're talking about the Colorado River cuts, and we're seeing that here in the Phoenix area as well. Electricity up, right? APS, we've told you that story here earlier this week, of course, and then water also going up. Now, the city says Title 9 of the Arizona Revised Statutes would introduce significant procedural requirements for a local ban. The Private Property Rights Protection Act of 2006, which was Prop 207, better known as, would also likely prohibit a full ban because banning data centers would have an impact on property values for those looking to sell the land to interested developers. Okay. So you're saying you can't ban it directly outright. Michigan's done it. I think New York, it was New York or Michigan that did it. They were the first of the kind. Might have been New York recently. Okay, so you don't do an outright ban. Just don't approve them. You can do that too, right? Council. Hey, Kellogg, you know them, cereal company. They came out yesterday and said they will remove artificial colors from all of its cereals. We knew they were going to, but they're speeding it up. By the end of this year, they say they will have it done. So it comes a year ahead of schedule. And Kellogg said last August that it would remove synthetic dyes from its cereals by the end of 27. But the company said yesterday it has identified fruit and vegetable based juices that will give cereals like Fruit Loops and Apple Jacks, will still give them their distinctive colors. These dyes give them the bright reds, the bright yellows. So they suppose they can reduplicate that now in healthier ways as well. Kellogg's, by the way, based out of Michigan. Well, it said it's invested in equipment that will allow it to transition to those natural colors. Kellogg said it's also removing BHT. That's an artificial preservative from the small number of cereals that still contain it. They've removed it in most of them as well. Kellogg has faced pressures for years to remove these artificial ingredients from its cereals. Now, this is what frustrates me with this stuff. They've removed it in other countries. You go to Canada or in Europe, they don't have any of those chemicals because those chemicals are banned there. Now they act like they can't do it in the US because, oh, technology. But they've already done it in other places. That's where you get frustrating. It's capable and they know how to do it, folks, out there. But they are doing it ahead of schedule. The other thing that's kind of changed this process, Walmart and Target both came out, Target first and Walmart afterwards, uh, basically said we will not sell products with these certain artificial dyes like the Red 40 and stuff after this year. So they're risking getting banned from Target. I know Walmart said their private labels will not have this stuff moving forward. Target said outright, we will just won't sell those products anymore. So they have incentive, more incentive than ever, to get those dyes out to stay in these big retailers as well. And folks, this final story, I'm just giving you a heads up. Don't shoot the messenger. Have you done this before? I've never thought about doing this. But influencers on the internet, TikTok, oh, sometimes it's for good, a lot of times it's for bad. But influencers are out there, and there's a big food induced debate here coming up. All right. And I agree. A lot of things go with Coca Cola, and a good burger goes great with Coke. It absolutely does. So there's nothing weird with pairing a McDonald's cheeseburger with Coca Cola. Right? You take a bite of your hamburger, take a swig of your Coke. Fantastic. Well, these TikTokers are out there and social media users. They've been trying the combination by dipping their burgers into Coke now. Some people have tried Sprite. Some people have tried other things, Dr. Pepper. Some people say the hamburgers are too dry, which I agree with. I wouldn't eat a McDonald's hamburger if they paid me to do so. I eat other things there, but not that. And so they say dipping it in makes it soggy. And if you think about it, it's not that different than eating your burger and then drinking it. But oh my god, the sogginess. Some people said the Coke or the Dr Pepper specifically, the Sprite wasn't as popular online from what I was reading, but the Coke and the Dr Pepper they say enhance the flavors of the hamburger more. Okay, whatever. Are you interested in this? Is this something you're interested in doing? I am not. I am not at all interested in this. Ethan said, I do this with fries. You put it with the sodas? Eh, I know, like, Frosties and fries obviously is a big deal there at Wendy's and stuff like that. Yeah, see, Ann said fries and a Frosty, yes. Burger and a Coke, no way. As well. I agree with Ann on that one. Just, I don't, who wants a soggy burger? Ew. Yeah, no, thank you. I'll have it on I'll drink it the old fashioned way. Bite a burger, choke on it, drink the soda down as well. Yeah, Ann says, not a fan of soggy foods. Autumn chimes in and says, I'm with you. Yeah, exactly. Just it's too soggy. It was funny because one person, one TikTok person that did it, an influencer, put it in Sprite, and like the bun fell off because it was so soggy, and it fell off and fell into the soda, and they were like, no, that's too soggy. Hopefully, I didn't ruin your breakfast here with this story here this morning. But folks, wanted to bring the new trend that the youngins are coming up with here today as well out there. Hey, this weekend, either experiment with that. Let me know how it goes. Hit me up, of course, text line 623-252-6670. YouTube chats as well. You can watch us on demand. You can chat on the YouTube chat there as well. Pops up on our YouTube page, and we do see them there and respond to them there as well. And folks, wraps up our Friday. Good day on the markets. We'll see what Monday brings. Coming up Monday, 7 a.m. here, McCollum on Business. Live on YouTube. Come and join us. Or on demand later in the day, folks. Main events coming up next. Woo, we got Cardinals to talk about. Diamondbacks weekend. Football season has started. All I'm going to say is I look right on my Carson Beck take after they drafted him. Love the kid. Love him even more after last night. We'll talk about that, folks. Come on back Monday morning or come and join us here at the main event. See you then.